The topic this morning that we'll discuss should be of high degree of importance to all of you. It's really your money and how much of it you'll have several years from now. This morning, gold is over $1,400 per ounce. It's a decisive breakout in U.S. dollars, in loonies, Aussie dollars, across every currency across the board. It's breaking out. And you look at this, the companies you'll be hearing from today. I know all of these companies. We've covered them in some of the newsletters that I write. We've met the management teams. Any one of them on their own is worth consideration, but there's something about these companies that what I'm going to talk about should be layered on top of any meeting that you sit through, because the bull market that's about to break out is going to be very big, but it's not going to be like the bull markets of the past. And the reason why is because the world is quite a bit different today going forward than most of us in here. I'm talking 40 years back. So if you're experiencing a bull market more than 40 years ago, maybe you'd be able to disagree with me. But what I'm going to share with you, the research that we've done is critical to deciding where you put your money. And it's not about the deposit that's in the ground, and it's not about the management team. It's about something that's much more important that no one is talking about. So first, let me kind of qualify myself as to why this is something that you might want to consider. I write a newsletter for Doug Casey. Some of you have heard of Doug Casey, but there's kind of a backstory as to how I ended up with Doug Casey. And 20 years ago, I was working in low-level finance. I kept being hired in a sales capacity because I was somewhat of an average level of charisma, and I had too many ideas. So the problem was always the guys I worked for said, "You have too many ideas. Can you just shut up, and can you just go sell the thing that we want you to sell? We don't want to hear about what you think is going to happen in the world." And so obviously I got to a point where I said, this isn't going to work for me anymore. And I had been trading my own account for a few years, and I'd made sizable bets against Fannie Mae and Countrywide. I had a guy that I was trading with. We agreed to make the same trades, do the same research with our accounts, and we just got creamed shorting Fannie Mae and Countrywide. We lost a lot of money. This is in 2006, specifically the summer of 2006. We had done a lot of these things you see now in The Big Short. We had gone and talked to these low-level people in the U.S. that had bought 7 condominiums and all these things, and we lost money. We couldn't figure out why these Fannie Mae was $50 and Countrywide was $80. We didn't understand. So anyway, long story short, this market did collapse, and what I did is I'd done all this work, so I liquidated my entire balance sheet. I took half of it and bought single-family homes in the U.S. as cheap as $10 a square foot. I think you measure them by meters here, so we'll have to do a bit of a conversion, but $10 a square foot is about 1/15 the price you could rebuild a home. So if that gives you some idea of how cheap they are, and I still have those homes today, and I detest real estate. I bought them because I felt like we were going into a period where people would be renters, okay? And I'm telling you this for a reason. It's not to get off the topic of resources. The other half of the money I put into resource stocks because I had been in the gold market for about 6 years at that point, and I felt like I had an edge with picking early stage gold and silver producers, and these stocks did quite well. Long story short, I started a fund with another guy, and we closed that in 2013. I went to work for Doug Casey effectively and other newsletter guys. And what happened was I had a blog where I'd written all these things I'm telling you. And I tell you all these things so that you can see. It's very important when you listen to someone to know what they've done, okay? So they're not just telling you something. I want you to see that there's a pattern of thinking that's very important when you listen to someone. And it's a pattern of thinking with me that is non-linear, okay? Almost every single person that you'll meet in high finance, I've met guys that sit on Fed committees. It's shocking. When you meet these guys, you're beyond unimpressed, okay? I've met the highest guys. They don't know how to think, all right? They think in a linear fashion. What that means is they take what just happened and they extrapolate that out in the future because they feel comfortable about what they just saw and they figure that'll just keep happening forever. That's a way to get your head chopped off, okay? Especially with the things that we have going on now. This is a completely different world that we're entering. And so the basis of what I'm telling you today, you have to understand how I think, because all these things I was explaining that I did over the last 20 years, they were completely nonlinear. They were taking things that were outside of people's purview and saying, What just happened isn't going to happen again. It's going to be different. All that to get to the point of how do we pick the right companies to be in at this conference and make the most of it. This is what's going to happen in the world going forward. 1972, President Nixon landed in China. Could have been a publicity stunt because he had other problems, who knows. But it ushered in 40 years of walls coming down, okay, in the world. All kinds of walls. Concrete walls, barbed wire walls, trade walls. I mean, you've heard of some deals like NAFTA. You haven't heard of all these other deals. You know, this Northern African trade deals. You look up history of trade deals. There's so many deals you've never even heard of. 40 years of accessibility in the economy. It's beyond just trade. It's the internet. Look at all these things that came during that period, that 40-year period. That period is finished, okay? It's over. It didn't end yesterday. It ended 2 or 3 years ago. I mean, we could argue about the date, but maybe Trans-Pacific falling apart was the time when it really ended. But it's finished, and it's not coming back, okay? And what I want you to see today, what we see and what we've done a ton of work on, and I haven't seen anywhere else, is that what you're going into now, I mean, if someone had told you in 1972 that we were going to go into a period of walls coming down, you could have traded that. You could have traded that, and you could have made a fortune. A lot of guys did trade that. I mean, Soros traded that. All these major guys that you are familiar with, they traded that. They stuck with one big trend, okay? If you can find one big trend, you stick with that trend, you can make more money than you can possibly spend in a life. In fact, your great-grandchildren will be spoiled brats because you'll have enough money that you'll effectively ruin their life trying to give it all away and do something with it, okay? So you have to find this big trend. And the world is now trending. It's being compressed into zones. I want you to think about looking at the world. And for 40 years, we were looking at the world opening. This was a world that was opening in every different way. Now we're going into a period where it's being compressed into zones. And that's important because if one of the companies that you buy is in the wrong zone, you're going to have an impossible time making money. It doesn't matter how rich the deposit is. It doesn't matter how great the management team is or the financing going into it or anything. It's in the wrong zone, and the world is going to fracture into these zones. So what is this going to look like? Well, let's look at a few things that's already happening that you can already see these zones. Last year, I went to the DARPA conference. DARPA is the U.S. Defense Advanced Research Projects Laboratory. Why would I go to this conference? Well, I was studying GPS, and GPS is fractured into zones. I'm not sure if you know this, but the U.S. launched the first GPS system. There's 30-odd satellites, and this was a service to the world. So the U.S. was saying we can use location data so that ships aren't running into each other, all these things. And we'll give access to these satellites to anyone in the world. Well, recently, Russia launched a system that can shoot a missile from space to knock GPS satellites out of orbit. Well, why does this matter? It's more evidence that you're fracturing. Russia has the GLONASS system. It's 30 GPS satellites, completely separate from the U.S. system. India has 8 satellites in their own GPS system for the subcontinent. China has 30 GPS satellites. You see how now, instead of having something that was opening, we had a technology that everyone could use, everyone in the world could benefit. Now we're changing that. We're closing down into zones. We have zones with visas now. There's places in the world that, as an American, I used to be able to go. Now there's threats that I won't be able to go there. I'll have to have a special visa to go there. And there's the trade zones that you're familiar with. So if you look at the world, you can start seeing these zones. And who's playing these zones? What are the important zones? Well, if you look, the Chinese are playing this in a very different way. I mean, I've been to Belarus, all over Eastern Europe, very poor countries, and you see all these Chinese people. What are they doing there? Well, they're building power plants, they're building railroads, they're building ports, they're building stadiums, they're building all these things. Howard French wrote a great book called China's Second Continent about how China was sending 50 million unwanted adults, mostly male, and prisoners included, over to Africa, encouraging them to interbreed and to be part of the community there, and to have palm oil plantations, and to position themselves with dry cleaning stores and coin laundries and grocery stores around key parts of town. Why are they doing this? Well, China's attempting to play Africa in a different way than you're attempting to play Africa, okay? Most of the people in this room, I'm looking out at a bunch of people that seem to be Westerners, and they think about things in a very different way. Okay, you're going down and looking for an asset to buy equity in this asset. The Chinese are going in and saying, we're not going to waste our time and money with that. We're going to go about it a different way. I think they're going to be more successful. And what the Chinese realize and don't want to tangle with is that Africa's #1 export is going to be people over the next 10 years. You know, you have this flood of people leaving, okay? So mining investments in Africa need to consider what zone is Africa going to be in? And is that going to be a zone that I can have influence over with my money? And if the answer is no, then you have to really consider this, regardless of the economics of the project. What zone is India going to be in? India's $1 billion plus. India will be, I think, the largest, most populated nation in the world. You know, going forward, you know, look 10 years ahead. And what about India? Well, India is very important. So India is an ally with the U.S., but as you see right now, they're taking the S-400 missile defense system, and we have a problem with that. Why do we have a problem with that? Well, it can shoot down the F-35, and it can, more importantly, it can decipher the F-35's stealth capabilities and all these different things, okay? Sounds like it's off the topic of what we're talking. It's not. It's very important because, remember, we're getting into zones with defense. Who can shoot what down? Who can do what? The Russians are quite a bit more capable than people realize, you know, and it's very interesting to say, if you have this world where you have zones for defense as well, what does that look like? Am I going to be able to invest somewhere where I don't have influence from the country that's my zone? If I'm outside of my zone, will I be able to invest? I say no. And you have to think really hard about that because you look back over the last 40 years, it wasn't a consideration. Capital markets were opening. I mean, you go to Brazil 25 years ago, everything was being privatized. Things were being opened. Corruption going down, access going up. The ability to go down and to take a mining claim or a royalty claim and to attach yourself to it and to secure payment for yourself was being enhanced. Now it's going the other way. In Mexico, Monex, there's a big scandal now where I was reading about this morning, where Monex, a lot of accounts just vanished. There were 5 or 6 pesos left in the accounts. And people say, well, what are we going to do? We can't do anything about it, okay? Mexico's important to the United States. Let's look at that for a minute, because the question is, what will the United States zone look like? And I think the UK will be aligned with the United States in a zone, and I'll explain why later. But in the US, if you look at what happened with NAFTA, okay, so once we opened NAFTA, foreign direct investment in Mexico has gone up 750%. That's a shocking number because you're talking basically about going from peasant status up to something that's, I think, fairly impressive. I was just in Mexico City. I really enjoy visiting Mexico City. It's a sophisticated place, and there's 0 Americans. I mean, you could be there for a week, you won't see 1 American. And I find that very interesting because sometimes my complaint is there's too many Americans that I'm running into. They haven't been anywhere and they don't know very much and they watch a lot of television, so it's very difficult to sometimes talk to them. Okay, so Mexico now is a serious economy, but what happens is Mexico now exports, I don't know, 35 to 40% of their GDP to the United States. Okay, so when you look at the headlines of what just happened with Trump, this matters for resource investors. Why? Because Mexico produces roughly a quarter of the silver in the world every year. That's a huge number. And they basically elected a communist. Now, what's the implication going to be? You know, we'll talk about Trump in a second, but look at what just happened with this deal. I wouldn't be surprised if AMLO then starts to fight back with more concessions on silver and gold production. I mean, what's the difference to him? Attaching another government royalty to these things? This might be a good way to fight back. What else is he going to do? He has to go along with what Trump wants because he can't lose 35% plus of his economy, of his export economy. He can't lose that, okay? So is Mexico going to be under the U.S. zone? Probably. Is Latin America going to be under the U.S. zone? Well, let's look at it. Personally, I think there's something to the fact that Ecuador gave up Assange. I mean, I don't know if it could be a local subject here that people have different opinions on, but I find it strange that after all these years, you would then give the guy up instantly. Some of the mining companies that I'm close with in Ecuador say that there are interesting things going on that kind of things have perked up from the U.S. perspective. I think there's something to that. Is the U.S. trying to secure the northern crest of South America for exactly the reasons I'm talking about? I think yes. What's happening in Venezuela, it's a proxy battle between Russia and the U.S. It's a proxy battle. No one really cares about Venezuela. It's a resource-rich place. It's not really that much different from Colombia or from countries that are around it, but it's a battleground right now for East versus West. And who's going to win? Maybe the U.S. can win that. You know, China's building hydropower capability in Argentina. So you can start seeing in the continent, everybody is positioning. Everybody is trying to figure out what they're going to do. And you should be doing this too, because you have access, if you're based in London, you really have access to the U.S. zone. Think about, a lot of these things tie back to intelligence. Think about Five Eyes. That's probably your U.S. zone. You've got Aussie, New Zealand, Canada, U.S., UK. This is probably going to be your zone. And I think you can make the most money and, more importantly, lose the least amount of money. Because let's be honest, it doesn't matter if you pick the right deposit in the ground in a far-flung place. If you lose the investment, if it's seized, and you say, well, that's probably not going to happen. Well, people said that in Tanzania. And look what happened. It got very complicated very fast. And effectively, you made a donation to the ruling party. And then the ruling party could change like that, and you have to make another donation, because these people don't give warranties, by the way. I'm not sure if you follow how they work, but when the new guy comes in with a bigger tank, it's time to come back to the table to deal again, because the other guy flew to Zurich with all the money that you gave him. Okay, so this is the real world, all right? You have to consider this as a mining investor. So let's go back to the U.S. zone. I want to talk about Trump for a minute. In 2016, I went to every political rally. I went to a Trump rally, a Hillary rally, and a Bernie rally. I wrote about this, went in print, and I predicted that Trump would win the election. It's not just something I'm saying. You can read about this. Doug put a bet on this. He made 5 times his money because no one thought that Trump would win. I thought that Trump would win because I actually experienced what was happening on the ground in all of these places. I don't vote. I don't have a television. I don't pay attention to major media outside of Bloomberg and reading and all these things. I'm not at all interested in consuming kind of regular news, which most Americans are news junkies. And if you know anything about the news, which I'm sure you do, it's a propaganda machine. So to consume that, you cloud your vision and distract yourself. Donald Trump will win in 2020, assuming that someone doesn't kill him. I mean, he could have an unfortunate heart attack or something like that. I mean, I think that there was some, I think he realizes that, by the way. I mean, you saw a year ago, there were all these stories about his diet being so poor. It was almost a setup to say, well, he had a heart attack. I don't know what happened. There's been 5 U.S. presidents, 4 killed, 1 almost killed. I don't know if people know that, but that's about 11 or 12% of the U.S. presidents have either been assassinated or almost assassinated. You don't think of that, but it's a serious statistic. I mean, in Latin America, they send them to jail when they're done. In the U.S., they just kill them. So, I mean, think about it. Okay, so I'm convinced that Trump will win. Well, how do you understand Donald Trump? Well, one good way to understand Donald Trump is to realize that he did 15 full seasons of The Apprentice. It was, I think, 197 episodes. It amounts to making 96 full-length motion pictures. And if you spend any time on camera, I mean, I've spent a decent amount of time on camera for random interviews and all these things. It's a little bit stressful. I mean, you have to kind of get up and go, and you're just on. And if you did 96 full-length movies, I think you would be so comfortable under the camera that you could kind of go all your waking hours with the camera on, and you could manipulate the appearance that you had in any way you like. Does that sound familiar? I mean, this is exactly what's happening, okay? And then what you'll notice if you study Trump, if you study The Apprentice, and Scott Adams did a lot of writing about Trump. If you haven't read Scott Adams' work, the cartoonist, I mean, he did an amazing write-up on Trump's personality, and it's the most accurate thing I've read about him. You should read that, because what you'll see is that Trump is the perfect guy to run the U.S. as we're headed into a system of zones, because Trump is a guy that deals with every single person individually. Okay, this is exactly what we're talking about with going into zones. It's you're gonna get a different deal, and you're gonna different deal, and everybody's gonna get a different deal. And you strike a deal, and he's gonna keep his word on the deal, but everybody's gonna get a different deal. It's not gonna be one deal for everyone, or one deal for Latin America. It's gonna be one deal for Guatemala and one deal for Honduras, and then you're gonna go like this around the whole world. And this is gonna push the world further into these zones, okay? And so I think if you start investigating all these setups that we're talking about, what you'll see is that this is definitively where we're headed. And to leave this out of your investment calculation is a huge mistake, because what will happen is you're going to wake up down the road and you're going to say, I thought I did my best thinking, I thought I considered all these things, I met the management team, I read the research, I did all this stuff, and I got really hit sideways in a place like a Tanzania type situation. And how could I have seen this coming? Very easily, if you considered that the influence that your zone or your country may have is waning, okay? Or if it's consolidating into a certain part of the world that maybe you haven't spent a lot of time looking at. And if you can see that you're losing influence over a particular area, you might want to abandon these investments entirely. And so when you start looking at these things, and I'm gonna shift to tell you what I've done about this with my own money, okay, which I think you'll find very enlightening. But when you start looking at these things, I mean, take one more example, is look at Russia. I mean, Russia, the stocks are opposite of the US. They trade with double-digit dividends and single-digit PEs. You know, there's a reason for this, right? Because the influence that the West has is it's non-existent. Okay, so we've been working on this for maybe 2 years now. You know, it took a long time for us to figure out what this is, and we think we've figured it out. So I've made the largest investment of my life, the largest single investment of my life into a company that I think is positioned to not only survive this, but to also absolutely thrive. And for instance, we have an asset in Tanzania. We've had no disruption of payment, you know, because we're collecting a royalty in Tanzania, and we're doing that on the back of the company that lost 15% of its ownership, you know, when the government came in and decided what it would take. Okay, so I'm a big believer in the model of royalties, and you all know how they work. Okay, so there's a percentage of production in the mine. I think it's the closest thing to having a tax that you could possibly have in life. I was always fascinated by the stories, the Warren Buffett stories of Buffett said if he could own one thing, it would be a toll bridge, you know, because there's no other way you can get across to the island where you have your beach house unless you pay his toll. And I thought, well, this is great, and this is kind of like tax. I mean, if you could control a county, I mean, you had a system like this sort of here at one point, but I mean, control the county and you can collect revenue from everyone's productive activity in the county. To me, that's a business that's unrivaled. Okay, so, and I'll tell you this, and then we'll kind of wrap up. I couldn't find a royalty company that met my standard, so I created one. It's been 30 months ago. We have a 60% compounded average growth rate since going public. It's called Metalla Royalty and Streaming. The ticker is MTA in Canada. It's MTAFF in the US. I'm a director of the company. I've bought a lot of stock, what I consider to be a lot of stock. I bought stock Friday. I bought stock the week before. I've continued to buy stock. And you can track that since I'm an insider. You have to see that. And the reason why this bet will win as the world compresses into zones is because you have diversity of cash flow and you're not tied to one asset in one zone. So as you meet with companies today, I want you to think about, in addition to the guy that you're talking to, which is important, and the asset and the financing and all these things that matter, I want you to think, where is this place? What zone is it going to be in? And once that zone is defined, am I comfortable having just one asset in one zone? Thanks for having me, and I'll see you all around the conference the next 2 days. Thanks.